Good morning, everybody. It's Wednesday, September 22nd, 2021, and we're going to get started with our pre-market analysis on the S&P 500 futures market. I'm going to do this probably at the beginning of every pre-market. Just go back to the day before, and I'd like to just kind of share where the market turned right off of our eye levels. So we give out to our members some really strong support and resistance levels that seem to work over and over again in the market. And I don't want to share the exact levels with you, but I do want to share all these instances where the market came right to the eye level, either hit it to the tick or, was right there, either, a few ticks beyond it. No more than a 2-point break of the eye level, and then the reversal in the direction that you would expect. You can see we came right up to here, pulled back, right up to here, pulled back, continued to sell off, pulled up to the next eye level, pulled back, came to the next eye level, pulled back. And so this is just going into yesterday's market. It was a little choppy at the beginning of the morning there, but then we broke through all of that, pulled back, came right to our eye level, sold off from there. And then when we sold off, came all the way down and bounced right off an eye level down here. Again, not breaking it by more than 8 ticks, but typically it's bouncing right off of it or just breaking it by 2 or 3 ticks. The 2-point break is an anomaly, really. Most of these bounces that I'm highlighting are literally to the tick or within 2 or 3 ticks of the level. So here you can see came down all the way down here, and interestingly enough bounced right off the eye levels here, came back up, broke through the eye level that was up here, pulled back, and then bounced right off of it. And then you can see here another bounce right off that level, and then as we came back down we bounced right off another eye level here, and then used the back end of it as resistance. So we bounced off of it, pulled back, came right back up, and then used it as resistance almost to the tick there. Came back up, used this one to resistance up top. And so you can see just time and time again, even if the levels don't work, they do work in so many other instances that you can go ahead, and as long as you're keeping a good risk to reward and you're mitigating the losses, those winning trades are going to carry through for some pretty awesome trades. So coming into this morning here, I'm going to jump to the ultra high time frames, and we'll take a look at the larger picture. The quarterly and the monthly are basically going to be the same as yesterday. You can see that we drew these trend lines for this really strong push ever since that sell-off for COVID back in 2020. Really the steepest slope that we've had in at least the last few years of price action. And we are actually breaking through that steep trend line right now with this new candle. Again, up top here, there's potential for a little bit of a bearish indication at the moment, but still have lots of time for things to develop on those higher time frames. When we get to our weekly, we talked about this yesterday. There is an argument to be made off of these previous swing lows on RVI and the current swing low. And you can see that RVI has pushed significantly lower. However, price has pushed higher from those previous lows on RVI. So there is the argument there that we still have a bullish divergence. Of course, keeping in mind, and this is the problem with this type of situation, it's not necessarily helping us out because we could still pull back down to 42.07 and then down to 41.17. And then all the way back to that 40.36 area, or maybe that's now shifted to 26, and we'd still have an argument that could be made. So it's not really helping us in finding a really good area of support. However, there is the argument there. If this candle closes at the end of Friday and we do have the same picture, you could argue that we do have that bullish divergence. Now, what I do like more so than the argument for that bullish divergence is the fact that we have this really big wick to the downside. And if we look just to previous price action here, a lot of times when you get these big wicks on the downside, you then get a week or two after of a continuation to the upside. For the most part, if we go back anytime we've had a big wick to the downside. Here's a situation where it didn't work out. Remember that this is not with trading, with anything in trading, nothing works 100% of the time. But when you find something that works more often than it doesn't, that's where you're going to get your edge. And then it just all comes down to risk mitigation, making sure that your losses are small, your winners are big, and then following through when you get your signal. So the weekly here has that bullish argument. And then as we get into our daily here, remember back at mid-September, we talked about the bullish divergence down here. Never got much follow through. And this was that week where we were basically sideways. But we did get the continuation from 24 up to 75 for a 50-point push. And then the bears jumped right back in and sold this thing off. Yesterday we talked about this bounce right off the 75% retracement level. Again, this is a range down here. Once we break through 61.8, I think some people look at the 73.6% retracement, something like that. But essentially 75 to 70 would be that next area that we would expect the bulls to hold if there's going to be any type of bullish follow through on a pullback. And so here we got the bounce right off the 75%. There are no arguments here right now for a bullish or a bearish divergence unless, well, let's take a look here. Since we already had a divergence from this low up to this low, we now have to really look at the current low right here and then look forward from there. And we don't see a divergence because we've broken to a lower low, and so has the RVI since we made the low back here on August 19th. So really nothing over here from a divergence perspective that's helping us out. What we could just look at the candles, and again, there's that nice big wick to the downside on this candle, essentially 50% of it. And so I said that if we could stay above that low of that candle and come up and break that high, that would be what would be kind of an expectation for that kind of candle there. And you can see yesterday, pretty wild looking situation there from a candlestick perspective. Maybe even arguably a very bearish looking candle, indicating we should continue to go ahead and push lower. But it looks like we're kind of in a sideways situation now. So here we are on Wednesday. Here's Monday, Tuesday. Now we're on Wednesday. Looking kind of like, even arguably, you have kind of like this little triangle thing here, right? So we'll see what happens this morning. Right now, the daily, in my opinion, is not giving us enough strong information for a direction right now. We go down to our 4-hour chart. And the 4-hour right now, outside of the bearish signals we got before the sell-off, is showing us that we have a little bit of a bearish divergence right now off the overnight high. Or I'm sorry, off of the current high that that's the overnight high. So off the overnight high, we're getting a bearish divergence there. Again, this candle closes at 7 a.m. So we're going to have to wait, because if we go back to the previous candle, the RVI was lower. So there's no divergence off the previous candle, but on the current candle here, we definitely have a potential bearish divergence there. So we'll have to monitor that into the 7 a.m. hour here on the Pacific. And outside of that, we don't really have any type of bullish argument off the lows. So kind of the same situation as yesterday. In fact, this is the same low that we looked at going into yesterday's market. So no bullish argument off the lows there. And on the daily as well, no bullish argument off the lows. So kind of like yesterday. When we get into the 60-minute here, we have that bullish divergence from the lows, from the previous daily low from back on the 20th. And now currently, no real strong bullish argument off the lows, but we do have a bearish argument off the previous daily high. And then there's the bearish argument we're getting now off of the overnight high. So we're seeing more bearish signals right now than we're seeing bullish signals. Let's go down to our intermediate time frames and see if we get any type of agreement here. So we'll look at our 30-minute first, and 30-minute also does have those bearish signals. Looking at, so nothing, no bearish indication from the previous daily high So no agreement there with the 60-minute up there. But we do have agreement on the bearish signals off of the current overnight highs. So we do have kind of an agreement there with the 60-minute and the 4-hour. Now on the 10-minute, we also do have the same bearish divergence there right around 3 a.m. Now we got another one here on the most recent test to push higher. So pretty much a bunch of bearish indications on the 10-minute up top, which is giving us agreement from the 10-minute to the 30 to the 60 and to the 4-hour. And then keep in mind that 4-hour signal could change because we have another 40 minutes before that candle does close. So there are a bunch of bearish arguments from the highs of the overnight, and looking back here to the lows we made, really not a very strong bullish case from the overnight low. So if we look to all the other time frames, we don't have any type of bullish indication from the overnight low, but we do have a bearish indication from the overnight high. So I think that makes things pretty clear this morning. Just going off of what the signals are saying with no other type of interpretation, we have a lot more bearish signals off the overnight high than we do bullish signals off of the overnight low. Again, anything is possible. Just because we have more signals to the downside doesn't mean that the market is going to do that 100%, but it is giving us our bias for the morning, and I think that's where we'll leave it for now. And we'll jump into our members review now.